Welcome to my August 2025 update. This is my third update, having opened my Trading 212 account in June. So, this is the second full month of investing, and I've already grown the investment value to just under £3,000, which has been some going, but that's not a bad outcome as I'm seeing it. So it's good. But the key thing to draw your attention to here is we're underwater. So the unrealised result is a £1.75 pence loss. So that's 0.06%. And it actually grows because on a cash basis, so where I've got one dividend and some interest from some cash being held has been offset by the stamp duty. So that has added on an additional 75 pence. So I'm actually £2.50 underwater as it currently stands. So not great. And I'll talk you through my thought process and what I've done for each investment. So as you can see, Greg's is the biggest loss unrealised result at the moment at almost £34, so 4% lower. And what you can see over the month is it's been shorted a lot. So it's come up, my break-even point is 16.44, and so it's almost got there a couple of times, and then it goes straight back down as it's been shorted. I'm okay with Greg's, to be honest. I almost went in again at £15.65, but I decided not to. I'm holding fire. I've got 50 shares, so there you go. So £16.44 is my average price. I would look to take that one down further, but at the moment I'm just going to wait for the dividends, see what the price does, and then make a call. But that's going to be a dividend payment of about £9.50, I think it is. So some of that loss will be offset, and I've got confidence in Greg's as it goes through the winter months that things will turn around, and I've got confidence the share price will be heading towards that sort of £20-21 mark, which is the analyst's view of Greg's as it stands. My two standouts are Invesco, which is an accumulating ETF. It's all world, and that's a star performer, and really I should have grown that more. But what you'll probably see is it just keeps on growing. You take the 3-month view, the growth, I'd like to go into this a bit of a lower amount. Still not sure where the stock market's going to be and where it's going to head, so I've been holding off. But really, this is one I want to grow, as well as a distributing one as well. Taylor Wimpey I bought into over the last couple of days or so, and you can see it's pretty much been on the decline, and there's an unhealthy £14 loss. Very similar. I think I've got 536 shares. So I think I'm going to get sort of close to £25 from the dividend in November. So it just depends what the share price does post that. So the £25 will offset my loss of £14. So at the moment I'm okay. I think Taylor Wimpey will bounce back after their recent troubles and being booted out of the FTSE 100. So I'm still confident that that will pull back. I've got my Vanguard FTSE 100, also one that's done extremely well for me. I've only got the 12 shares in here, but enough to get almost £500. And that gave me my only dividend to date at £4.82. So you put that on to the 18.36, and you're nearer to £23 profit. That's very good. And once again, another one I should be looking to grow. Land Securities, you can see here the dotted line is where I've gone in, and it's fallen. It's a REIT. I think it will come back. I'm confident, and I'm quite comfortable. Very similar to Taylor Wimpey and Greg, so I'm in for this for the long haul. So I'm relaxed on the market movements. I will just be picking up the dividends. Pets at Home was a surprise because it turned. If you see the day, like most of the market, it fell on Friday, especially late Friday afternoon. So having been showing a decent capital unrealised gain, it's now showing, unfortunately for me, a loss, not by much. I've got 100 shares, so I'm £1 down. I'm relaxed on Pets at Home as well. I think they're a good investment, and I look forward to picking up the dividend early next year, and probably going to grow my position if this stock continues to fall. So I'm quite happy with Pets at Home. And Aviva, I got in, you can see I got in at the height really, but I was quite happy just to put a marker down for the investment. So I've only picked up 10 shares. I'll look to take that average price down from £6.74, probably below the 6.50, 6.40. So I'll be holding on, and I'll be buying into Aviva more once I can free up some funds. Once again, Aviva, very strong company, recently bought Direct Line, very strong in the UK general insurance, very good brand, very comfortable around the investments. So I'm comfortable with the investments. It's not the position I wanted it to be in, as you can see from being, so when you add it all up, it's about £2.50 down. But I'm pretty sure that even though it's underwater at the moment, depending on the market position, I think as we go through the rest of this year and the dividends come through, I think I'll be in good place. Like I say, I've got some cash being held, so the interest should offset the stamp duty. So with the dividends and the interest offsetting the stamp duty, I think the overall portfolio will be brought upwards. And as long as the market doesn't have a spectacular crash, I should be back in a positive position before the end of the year. So what do you think to my portfolio? Anything that you could see that you would make different? It's probably overloaded with Greggs, but I'm confident with Greggs it's going to turn around. But leave your thoughts, leave your opinions. More than happy and would be delighted to see any comments. But that is my position at the end of August 2025, and here's hoping that the position will turn back into the black. And as I always say, happy investing and fingers crossed. Take care till next time.